IRS process as it goes forward.
Right.
So
Now, there's also the income-based penalty that's the second slide that we have over here.
Right.
That you place 20% penalty plus interest.
That's right.
So there's a lot of penalty out
That's
here.
right.
It's better to do compliance.
that's right. I mean, considering, what the program does offer is certainty. If you come forward and you do everything on that laundry list for that large price tag that we're talking about, the 27.5%, you do get certainty, immunity from criminal prosecution and things like that. It's really about educating yourself about the program, talking to an informed representative, such as one of us,
Right.
who can educate you about the program, educate you about the pros and cons about entering and not entering, so you're in a position to really understand what your options are.
Right, and that only can be if there's an education awareness and workshops, and I know that Vinay and Cecil do a lot of workshops on many issues like that, especially if there is an audit by the IRS. I think that's when they should definitely consult a CPA or a chartered accountant or a tax attorney.
Absolutely, absolutely. If they're currently under audit, though, for any of these program years, they're not eligible to participate in the program, though.
Oh, I see.
So that's an excellent point that they should be aware of.
Yeah, and also, if the penalty is so big, is there any way they can have sort of a deal with the IRS? Let's, if I'm paying this much, can I waive a little bit?
Well, there actually are. What's newer in the 2012 program that was absent in other years is the availability of certain smaller penalties for certain taxpayers. There's a 12.5% penalty instead of the 27.5% penalty when the highest aggregate balance in your accounts are under $75,000. Of course, very fact specific. So either you're in or you're out. And what happens oftentimes is you get a taxpayer who comes in and maybe 1 year they were under $75,000.
Right.
Other years, 78.
Exactly.
No good, you're out. Yeah, so that's really unfortunate. There's also a 5% penalty, again, very, very fact-specific, which really applies more to inherited accounts and things like that.
Now, do you pay the penalty at one shot, or you can put it up, every few months because they can't pay the whole thing at one time?
It depends on taxpayer situation. I mean, IRS has said that you can submit these Forms 433As, which are collection information statements that are very lengthy and talk about your financial situation, essentially your entire financial picture. So taxpayer would really have to be in dire straits to demonstrate that they can't pay at all. A common fact situation I think for all of us is people have money tied up abroad. They can't access it. They have it in real estate. It's not readily available and things like this.
Right.
So I mean, my advice in a situation like that is always, it's better to ask.
Right.
Why not ask? All they can do is say no, but you can ask.
Right. I want also tell our viewers that Norris, McLaughlin, Marcus, that's the firm that Melinda works in. They're sponsoring this program, so I want to thank you for that as well. And coming back to Vinay, Statement of Foreign Financial Assets, again, a lot of new requirements.
Right.
And if you fail to file, well, we see the penalties are just piling on.
And the Form 8938, before we get into it, is really part of a trend towards increasing governmental scrutiny, meaning that if somebody's not been complying, this is another reason, another step in the direction that they're really going to have to figure out how to deal with these problems.
Right.
Maybe it's the OBDI program that Melinda spoke about, maybe it's some other less structured programs, but the introduction of this new form is a new set of filing requirements that if somebody really hasn't been focusing on what they should be, haven't been reporting all their income or haven't been filing FBARs, this is not another thing they want to get behind in. So that's why this is really the perfect time to address any past non-compliance.
Right.
So new with the 2011 tax filings, which are the filings that we're filing right now that are due April 17th, is this Form 8938, Statement of Foreign Financial Assets.
Right.
And what this means is this is kind of, think about the FBAR that requires the foreign bank accounts. The Form 8938 is a form that really looks at a broader scope of financial assets, okay? So yes, it includes the bank accounts, but includes things like investments in Indian mutual or foreign mutual funds, investments in foreign corporations, an investment in a foreign business, maybe if it's a partnership. If I've made a loan to somebody in a foreign country, it's almost like a bond. okay, and I'm getting interest from that. So that's a foreign financial asset. If I have a life insurance policy with a cash value, that's a foreign financial asset, okay? So anything that's financial.
What if you're a minority partner in any of these assets?
Okay, so even if you're a minority partner, that's an included asset. But so first you have to figure out is, what are all the assets that I own that are subject to this following requirement? So if I own 5% of a Indian private limited company, okay, that 5% is going to be included. But what I have to do is I have to look at the value, I have to make this list of all the foreign assets that I own. And I have to figure out what their value is. And then the IRS has some tables that say, based on my tax return filing status and whether I live in or outside the U.S., what's the threshold at which I need to file this form? If I'm in the U.S. and I'm filing a joint return, if the value of my foreign assets at the end of the year is $100,000 or greater, or at any time during the year is $150,000 or greater, I have to file this form. Okay, again, even if I exceed it by one day over the 150,000 mark, or on December 31st, $101,000, I have to file this form. And I have to simply and there's no tax due. I have to disclose what my assets are, and I have to show okay, if I may own stock in a private limited company, maybe they paid a dividend, maybe they didn't. But if they did pay a dividend, I need to just show that where I've reported on my tax return. Okay? The joke is that criminals are not filing these forms. Criminals are not filing FBARs. So we want to tell the IRS, I'm not a criminal. So all the more reason why I should be filing this form.
And this Form 8938, it goes along with your tax returns?
It's part of the tax return. So unlike the FBAR, the 8938 is part of the...
So that goes April 17th along with the tax files.
And if there's any doubt as to whether you have to file the Form 8938 or not, get an extension. Okay, an extension is very easy to get.
So they can file in their other tax returns, but Form 8938, if they want an extension, they can ask for it.
Well, no, actually, because the 8938 is part of the 1040, you would be getting extended from your 1040.
Okay.
There's so many people that feel like getting an extension for their Form 1040 is a bad thing. They think that they're going to be audited. They think that they're going to pay more tax. Really none of that is true.
And what's the last date for extension?
Well, if you get an extension on April 17th, that takes you until October 15th. Okay, so you get an automatic 6-month extension. What you do have to realize is that if you are going to owe tax with your tax return, you need to pay that by April 17th. You need to make an estimate and pay that with the extension. If you're going to get a refund, then you don't have to pay anything, but you do need to file the form, get the extension to make sure that this form is filed on time. Because like the other foreign-related filings, the penalties for not filing are very intense. It's $10,000 if you don't file the form, and then if the IRS sends you a letter and asks you to send it, it's another $10,000 for every 30 days. The other major part of that penalty is that usually for tax, if I've forgotten to include some income of my tax return, the IRS has 3 years to come find me. If you fail to file this form, that 3 years is doubled to 6 years.
I see. Now they should keep all their documents for 3 years at least, for the last 3 years, or how does it work? Because I know with regular IRS, you got to keep all your tax returns, all your receipts and so forth for 3 years at least. In this kind of
3 years is the minimum. I would be, for me, I would.
How much of paperwork?
You have to go electronic. You have to find a way. It's important to keep it. Yeah, you want to hold on to these things.
Tell us, because you have a lot of expertise in this area, all three of you. Give us some live examples of the cases that you have worked on and that have actually, taken this to the next level for you as well.
Sure. Very common fact pattern I think all three of us have seen is people wanting to buy property in India, often just for a second home. They'll be living, working here. They may have a small bank account, with maybe $1,000 less than the FBAR requirement. But in India, you can't. If you're dealing with a builder, you really can't wire money directly to the closing from your U.S. bank account. It just doesn't work that way. So they will often take their Indian bank account or form one, and a week or two or a month before the closing, because they're not really sure when that's going to happen, they'll wire the deposit money. So they might wire $100,000, $200,000, and it may sit there for 2 days or for 2 months. And then it goes out to the builder, and then they have their flat that they bought, which they're going to use as their second home. They never filed the FBAR to report that. The interest income may have been a very small amount, but they didn't report the interest income. So that's a very common fact pattern we see.
I see. So what we're learning here is actually, list all your assets that you have overseas, because there's significant penalties if you fail to disclose, and Melinda talked about that, and Cecil and Nazareth as well. And lastly, Cecil, tell us, finally, we talked about misconceptions and everything for NRI filing, but any other tips that you would like to give to our viewers?
Yeah, Renee, my golden rule is compliance, compliance, and compliance. So if you haven't done it...
That's the mantra that we're talking about.
Absolutely. The government is giving you a second opportunity. OVDI, FBAR, these are all great words in the, you won't look it up in the dictionary. But I tell all my clients, advise all my clients, first is get your assets together, understand what do you have. And once you have that, start reporting the income and file an Indian return, even if you don't owe money.
Right.
But that shows compliance, and they treat one very favorably in the U.S. because there was an attempt to comply. And I did have clients in the OVDI where they filed 10 years returns. So it became a very easy case. We had the returns. All we had to do is file the U.S. returns, amend the returns, pay the penalty, because that was a whistle clean case. The only thing they forgot to do was include that income and the credits in the U.S. return. And so that compliance factor was all there all along, because if they were not trying to hide anything, it was all the returns filed in India, all the returns filed in the U.S. The mistake or the misconception is they didn't realize that Indian income was also taxable in the U.S. and they could get a credit for that.
That's what the show is all about, to raise that level of awareness when you're filing your tax returns. Vinay, if somebody, when they put in their form for FBAR, just put out that form, do they get a receipt or they get an acknowledgement?
No, you generally don't.
They don't.
You should, and the FBAR actually has to be received by June 30th. Right. Unlike the tax returns where you can mail it. So you want to send it with some postal verification, whether it be Federal Express or certified mail, but you want to make sure that to get the verification that it was received, but you also want to make sure that it's received by the Treasury in Detroit Service Center.
So you don't want to send it just like a regular envelope?
No,
I see.
No, definitely not. That's really your only evidence that you filed the form, so that's very important to have that.
I see. That's an important thing.
Yes.
And Melinda, your final thoughts?
I think the most important point is compliance, educate yourself, find out what the rules are so that you can get yourself into compliance and do what needs to be done so that you don't face these harsh penalties that we're talking about here.
Right. So 3 dates that you must remember: April 17th for your tax returns at the IRS, FBAR is June 30th, and NRI filing is July 31st. So these are the 3 days that you must be, and the compliance is what we're talking about today. That is the pivotal point that we discussed. We want to thank Cecil Nazareth, Chartered Accountant and CPA from IFRS Partners, Melinda Fellner-Bromwit from Norman McLaughlin and Marcus, thank you very much, as well as Vinay Navani, CPA. And I'm Renee Lobo. Thank you so much for watching.